Most business owners think that year-end taxes is actually about filing your taxes, but the smart ones realize that year-end tax planning is actually about looking at your performance over the year, seeing what went right and what went wrong so that you can plan ahead for the next year. If you're not quite sure what financials you should be looking at, I understand it's a little bit overwhelming for most people, but here's what we can help you. You are going to look at 6 key financial measures to analyze before year end so that you have a better idea going into the following year of where you should be focusing. The first thing, and this is something that you can do throughout the entire year, and I actually recommend because it makes it a lot easier to do, is do a reconciliation of your bank accounts every month. So making sure that what QuickBooks or whatever software that you are using matches your bank account. And that actually means that as you're going throughout the year, you know that everything that happened in that month is done, taken care of, and you can quit worrying about it. So the one thing though that I want to make sure that you do as you come to the year end is making sure that any purchases that you've made in, let's say, December, especially if you've written checks for anything and you want those to be on your current year taxes, making sure that they are dated and in your software on the correct date. This is actually my favorite piece of being well prepared, is that when new opportunities pop up, you can actually take advantage of them. So let's say, for instance, you are planning to hire somebody, but it's in 2 months, but your ideal person becomes available. They walk in your door, they knock, they give you a call and say that they're actually looking for a job. You can hire them on the spot with no consideration for how much is this going to hurt me, because you've already planned for it. Maybe you have a competitor that's going out of business and you can make an offer on their company, buy their customers, whatever it might be. When you are prepared, taking advantage of those opportunities that pop up is something that can help your business instead of hindering it. So your cost of goods sold, if we're looking at a profit and loss, we're just going to go from top to bottom. Your revenue, your top line revenue, that's a lot of people, like a buzzword that a lot of people like to say. That is the total amount of revenue that you are bringing in. Right underneath that, you're going to have your cost of goods sold. This is what it costs you to buy whatever it is that you sell. So if you're a coffee shop, I used to own a coffee shop. I like to use that as an example. All of the coffee, all of the plates and cups and things like that we were serving, all of the food, all of those went into my cost of goods sold. If you are a plumber, this could include, especially if your plumbers are paid only when they are working at a location on a job, then your plumbers would go into cost of labor, cost of goods sold, as well as any parts or fixtures that you are purchasing in order to install. If you want to think strategically about how to give your employees bonuses, maybe it's just a Christmas party, whatever it is that really rewards your employees for the hard work that they've put into your business over the last year. And there's a couple of ways that you can go about it very strategically, and let's talk about those. First, I want you to start with a profit allocation plan, especially if this is something that you do on a yearly basis. And this is something that you can do very intentionally and with purpose so that you make sure you, 1, are able to actually reward your employees at the end of the year, but 2, make sure that it doesn't hurt your financial position.